Hey, what's going on, you guys? It's Everything Zach back again with another YouTube video. Today, we were going to be talking about my personal market predictions for this summer. As you may know, if you do know me, I'm going away to summer camp, and I thought I'd make some predictions for the stock market while I'm, for the whole summer, because I won't even be able to really look at it while I'm there. But again, make sure you guys, but make sure you guys drop a like, comment, and subscribe. Share the video if you like it, and all those mean a lot to me, so I would greatly appreciate if you do so. But I guess without further ado, we can dive right in. We're kind of just going to be going over predictions for the market. Not really individual stocks, but kind of sectors, parts of the market, and then the whole market, like the indexes, and kind of where I think it's personally heading. All right, I hope you guys do enjoy, and let's hop in. So, I guess kind of we could start just out with the S&P 500. That's the general market, the 500 top companies. You can really get a feel for where the market is with this index slash, I'm using the ETF here, for example, but it's definitely a good reference point. And I guess we can start off with just kind of the technical analysis of this. I'm not just doing technical analysis, but technical analysis is referring to the chart, what is on the chart, support and resistance. And we do know that the S&P 500 has been falling quite a lot the past few months, actually now about 6 months, which is kind of crazy to believe. It fell to a depth of around 25%, now around down 21, 22%. So in my general thinking, I am still in cash. I'm trying to stay out of this market right now, but I also am trying to be aggressive when ready. So I am ready to buy when I start being confident. I got cash ready, and I do want to buy at these prices, and I'm going to start. Well, I have started very little, but I do plan on starting to average into these prices. And I do think over the summer that this market might not. I do think for the summer that whether this market continues to fall this year, which I do think it will. I don't think the bottom is in. I don't think the bottom is 362. I think it's going to go lower, and I'll talk about where later. But I do think there's more pain ahead, but that pain's not going to be straight away. It's not going to just fall. I mean, we actually just last week had an awful week. So it's not just going to go straight down. That's not how it works. Everybody would be rich if it went straight down, because everyone would know. But I do think we could be seeing some rallies in the short term, even within the next few weeks and stuff like that. I do think we could be seeing. I do think that we might be staying under this trend line. So this trend line dates back a real while ago, all the way from around 2015. It's formed this, and then continued over here in 15, then 18, its high hit there, COVID high right before the crash, and then it acted as a support line afterwards, and it actually just broke this. And I do think it's respecting it kind of well. It's really choppy when it's around it, and I think we could easily see a retest. And then again, guys, we do have these gaps. You guys can see these gaps in the candles. Those usually like to get filled, and I do think those will get filled in the short term. I think so the market could probably see a rally even up to 400. Yeah, probably up to 400 area, and it would still be under this major trend line. As you can see here, the momentum has also really been completely. It's almost getting support just from momentum, because how bearish it's been and how kind of oversold the market's been. So there has to be, eventually the market gets a little bit of a relief rally, and that's, I think, what we may be seeing now. And then again, though, it will have its moving average cloud resistance. Same with the weekly, it crossed over. So a lot of stuff is bearish right now, but again, long term, it's probably not that bad. The monthly chart, did not mean to draw there, and you do see we do have the monthly cloud support. I think this is the 100-month moving average support, and somewhat with that, because it's a cloud, a range of 100 and like 75. It's getting support here, and it wouldn't be a bad location to find support, so it's definitely not going to just fall right through there. Lastly, I do want to point out my prediction for where it may bottom. There is a big gap all the way here from COVID. It's never filled. When I say filled, it's never came back to that level. Again, in the market, they love to fill gaps. It just happens, and it could happen with that. But also, you never know. There's also a gap over here that never got filled at 330. And again, this is at 280, so that's a stretch. In my opinion, I do think this market might end up pulling something off like this. I'm going tomorrow, so this is literally kind of my guess. I'm also just drawing lines, guys. I don't know exactly what it's going to do, but my guess is it's going to have a bit of a relief rally. I do think it might actually fall short term, but I do think it's going to catch around here, fill this gap. Might get over this, but I don't think it will get far over. If anything, I can't see it getting past the 418 level that it had trouble with there. So I think it could maybe chop up there, maybe with some down along the way. I just don't see it getting much over here, and if anything, definitely not over 418. If it did, it could get really steamy and it could get going up this summer. I just don't see that happening with interest rates still rising. Heavier pain is going to be coming. I more so see a scenario where it hits this and it starts falling more violently again. We start kind of seeing more downtrend. I don't have price in mind, but I do have the feeling that the S&P 500 is going to touch the pre-pandemic high, which is around 340, just under 340. I think 340 is a good spot for the S&P to bottom. It also has this gap support right around. I think there's a lot of reasons to believe 340 could be a nice bottom for it. And but again, obviously, it's going to depend on the fundamentals, interest rates, stuff like that. I'm going to have another video coming out in a few weeks discussing what it will take for the market to come back. So check that out when it's out. But I do think with this interest rates rising, inflation not on the slowdown yet, nothing is really in control right now. Stuff is spiraling down. Mortgage rates are now heading. I don't really understand the mortgage rate crisis, but something's going on over there. The bond market, everything just doesn't look good. And then at the same time, though, you're like, oh, that's when you want to buy. Long term, yes. That's why I'm buying. And honestly, it's never a bad idea to really invest long term if you believe in if you just believe in the economy really long term. But yeah, so that's kind of my analysis for the S&P 500, and it's going to be similar for these guys. So the Qs, so this is the NASDAQ. Same idea. They have the gaps. I mean, it kind of, actually, wait, that gap has been filled. So it actually doesn't have that one. So is that one. That's funny. So there is a gap over here. I don't see it going to 170, sorry, but that's all the way down here. I don't see that happening. But, oh wait, no, there isn't. There is not a gap, sorry. I thought I saw one. Yeah, I'm blind. I do see the NASDAQ maybe coming down to retest, again, the pre-pandemic high. I just think it's going to happen. The Dow actually just did it. It's getting a really solid bounce. You usually don't see 2.2% out of the Dow. The Dow is usually way less volatile. You're usually seeing lower movement. But the Dow, what a tremendous bounce from that support line. And again, it's also going to have this gap that it may fill. So you all definitely want to keep an eye on this area. That's going to be big. If it can get down below the pre-pandemic high, it could get ugly and definitely come quickly to fill this gap, I think. Definitely come quickly to fill that gap. But back to NASDAQ. The NASDAQ has been consolidating in this, I don't know, is this falling wedge or a flag? I don't really know what I'd call this, but it's in this little trend, up, down, up, down. It's catching the bottom right now. It wouldn't be a bad idea to assume it might come out to test the upper part of its wedge, but nothing's for certain. It's going to depend on the fundamentals. It also has the gaps up here to fill. So, again, that's kind of leaning me bullish short term, but still bearish long term. We're in this daily downtrend. We're in this heavy weekly downtrend. The monthly actually flipped red, which is not good. Not a good sign. But one bullish thing on this monthly chart is it did touch. Again, I don't know. Is this the 100? I believe this is the 100-month moving average, the bottom. I believe the bottom of this is the 100-month moving average, and it's getting support there from the EMA cloud. And yeah, and even the TTM squeeze is showing it now at equal level, which is on. If this were to flip on the monthly chart, that'd be really bearish. So it's gonna find support there as well. So definitely has some real near-term strong support. But it's just still in this heavy downtrend that it's scary. It definitely is scary, but I definitely think it could get down there. If it does, how far is that off its highs? if it gets down to the pre-pandemic, I mean that's 40% off its highs. If it gets there and I am available to buy, I would personally I would be buying at that level, because you know what, crashes aren't usually over 40%. They can be if it's extreme, but it's I would take that risk and I would dive in there. Right now, I'm still iffy. I'm still iffy on those interest rates and inflation. But and inflation and interest rates are really going to hit the Nasdaq, because all those tech heavy these companies that are lending or borrowing money. So these companies in the growth stages get hit really hard from these interest rates, and that's going to keep driving the Nasdaq down. The Dow Jones. So again, we kind of went over this already. Honestly, same thing. I don't see the Dow Jones going above its past old trend line from all the way back here. I actually don't. I think it dates back to like 2015 or 16. And you can see it respects it well. It had this wick there, kind of chopped around it as well up here, kind of like the S&B did. And again, this is in the weekly downtrend too. It does have this gap. Again, all these have these gaps from those really ugly days last week or 2 weeks ago. So I definitely think near term bullish, short term or near term bullish, long term bearish again, or not long term but like mid term. I just don't think it's the bottom. But for the Dow, it definitely has that strong support here. That's not a bad idea to have a bottom. That's a strong level of support. It's also, yeah, it's right near $300. Just scares me about this this that we're seeing here. We are seeing this huge gap, like I was saying earlier. That's a little bit scary to me. I think if it breaks, it could easily come down. But the monthly chart too, if it can get back over its past monthly low, you know, you could start seeing a bullish come around. But you never know. So my kind of prediction for the Dow for the summer, I think the Dow is going to be a bit flat, to be honest. I think the Nasdaq might go up and rally a bit. I think the S&P might rally a bit. The Dow, and then I think these guys will fall. But the Dow, I think instead of falling and kind of instead of rallying, I think it's going to kind of like, again, this is a while to say. So 7 weeks, it's not going to trend. I don't think it's going to consolidate that whole time. But I see it maybe staying in this trend line, possibly testing this trend line. That would be quite a big rally though. But it's possible. If not there, maybe from this gap, you'd be having some resistance around here, so something like that. And then I think whatever way it would break out from its consolidation would be its direction it continues in. I could definitely, though, see it be coming down here. So, like in bad case scenario, definitely would say it's possible for the Dow to kind of break out of a trend line and fall down, and maybe end up over here, because this is where it has that huge support from that gap, and that's a big gap support. So yeah, I mean, that's kind of what I have for the Dow and the Nasdaq and the S&P. And then I would like to talk about the VIX, because the VIX is always something interesting to look at. This is the volatility index of the S&P 500. In simple terms, it is measuring the volatility, the movement of it, but really it's measuring the amount of puts to calls that are being bought on the S&P 500. So I don't know exactly how to explain that, but it's measuring the put to call ratio. So how many people are buying puts? Puts are betting on the market going down. Calls are betting on the market going up. So basically just indicating how volatile it is. And this has this trend line support. I'm gonna get rid of this because I don't want you guys to deal with all that, but I can't individually delete all these slowly. So you got that trend line. It's in an uptrend. You don't like to see the volatility index in an uptrend. The monthly chart. So yeah, so people sometimes say that the technical analysis doesn't work on something like the VIX, but it definitely does. And screw it, I'm just gonna delete this, guys, so I can kind of show you. You have the VIX actually having now, it's kind of flagging. This is the monthly chart, but you can see it. You can see this. It has its resistance line and then its support line. So that's it's in this range. It's trending. It's trending in this consolidation flag. The question is, no one knows which way it's gonna break out. Nobody knows. It is in an uptrend, so it's, well, simple terms, it's in an uptrend. You can also see here the TTM squeeze. That looks kind of bearish for the markets, because the TTM squeeze is actually on this month. You can see if I kind of zoom in, it's flipping. This is a momentum indicator, and it kind of indicates the forward momentum of whatever it's measuring. And when it flips to the upside, that means the VIX is going to go up. VIX up, S&P 500 and the markets are down generally. So that's not good if it stays flipped, but also that's going to find the VIX resistance. So the VIX will get resistance from that. It will get resistance from this flag I just drew and showed you. It's resistance there. So there's going to be a lot of resistance there, and again, a lot of support on the markets. So it's going to be, I think, a fight this summer. I don't think the markets are going to move that much. I think it's going to kind of be a tough summer, just chopping a little bit, and it might take a bit to find its move. But it's making higher lows, but it's also making lower highs. So that's what a flag basically is, zigzagging, see which way it's going to break out. That's the way I would kind of play the market. Breaking out up, I would play short the market. Breaking out down, I'd be playing long the market. It's also above $30. It held $30 kind of well today. I was watching today. This is Tuesday, June 21st. It was holding it very well. So that's not good for the market. When it's holding up, and yeah, you could even kind of say there's a little bit of like a cup and handle, which is bullish, but that's bad for the actual market. You have like the handle here, cup, handle, and generally, obviously it's not going to do that, but generally that's a good pattern. Like it's bullish, good, up. Yeah, that's kind of all I have with the volatility index, but it's definitely interesting to see that it is flagging. So for the summer, I just think I don't have a prediction because I would just be guessing which way it's going to go. I do think it's going to stay in this range, though, for a little bit. Maybe it'll come and retest that. Wherever it goes, I think it's going to retest. So say it goes down, I at least think it's going to come up, retest this, and then go down. If it goes up, I think it's going to at least come and retest that while the markets rally and then go up. The VIX has had struggle getting over like the 38s level. It can't get to 40, which is good, technically. That's good for the markets. But it's definitely interesting to note that this is consolidating. You definitely should keep your eye on the volatility index, in my opinion, when you're taking in investing. So yeah, that's kind of what I have on my predictions for the market. So really, I see the S&P 500 kind of staying still, but I not staying still. I think it's going to be a bit choppy, but I think choppy in general. I think it's going to have big sways, but overall, I think it's going to be coming down within the next few months. So by August, I do think it's going to be lower than where it is today. NASDAQ, same thing. I do think the NASDAQ has capability of going kind of to test this trend line. It's volatile. NASDAQ likes to move a lot. All those growth stocks and heavy moving companies. And then the Dow, I think, is, like I was saying earlier, I think it's going to be choppy. I do think the Dow is going to hold this line really well. So I don't think it's just going to give it up quickly. Now, in a week, that could be completely wrong. But I don't think it's going to give it up quickly. I think it's going to hold this level. But I also don't see it kind of mooning. So I see it kind of just staying in this zone before it breaks out. And which way it will break out, who knows? Who knows? But I hope you guys did enjoy the video. Again, this is stock market video, so if you didn't completely follow along, I appreciate you still watching. And I hope maybe I said a few terms that maybe you could have learned from. Again, this is not financial advice, by the way, and I appreciate you guys all watching this video. Make sure to drop a like, comment your thoughts, predictions on the market, whatever. And make sure you guys have a great day and a fantastic summer. I'll see you guys around. Have a good one.